When I started trading many years back, I was very attracted to the stock market, like everybody else. I looked at all these day traders making thousands of dollars in one day, posting their big gains and showing off their Lambos. I thought to myself, if they can do it, why can't I? So I put a nice chunk of change in my trading account and started trading options. Little did I realize that although you could make a large amount of money in one day, you could lose all of it and more the next day. Frustrated, I spent a lot of time researching various trading strategies and realized that to win consistently, you have to be the casino and not the player. So today, I'm going to be sharing with you guys one of the safest strategies to make consistent and reliable income in the stock market. I'm going to teach you how to execute the strategy step by step so you can retire making $10,000 or more in income every single month. Hi, my name's Gautam. I'm a former finance executive turned options trader, and I'm here to help you escape the 9 to 5 grind like I did with the power of options trading. If you'd like a copy of my free ebook that covers my top option strategies to help you retire early, hit that like button, subscribe to my channel, and comment down below, and I'll personally respond to your comment with the ebook link. Also, don't forget to sign up for my free options newsletter, link in description below. So the strategy that we're going to be talking about today is selling put options. Let's start by understanding what are cash secured puts and how does this strategy work. So a cash secured put is an option strategy where you sell a put at a set price, also known as the strike price, for a set time. In return, you get a premium for taking on this obligation. If the stock drops below the strike price at or before expiration, the buyer of this put option can exercise, meaning you will be required at that point to buy the stock at the sold strike price. It is called cash secured because you will need to have enough cash to cover the cost of buying the stock at the sold strike price. Next, let's talk about some of the benefits of the strategy and what makes it attractive. First of all, income generation. You will make money as long as the stock stays above the sold strike price, whether it goes up or stays around the same level. As an option seller, you also benefit from theta decay, meaning the value of the contract declines as it continues to get closer to expiration. Another advantage of selling put options is you get your favorite stock at a discount. If the stock price falls below the strike price at or before expiration, and the option is exercised, you will get to buy your favorite stock at a substantial discount from the price that it was trading at the time that you sold the put. Let's talk about risk. Your risk is limited to the cash that you have to come up with to buy the stock in case the option is exercised. Now, another risk of this strategy is that you will be required to buy the stock at the sold strike price, even if the stock is actually trading under that strike price at expiration or at the time the option is exercised. So in that case, just hold on to your stock, let it come back, and then you can sell it for a profit. Next, let's discuss the steps that you would take to execute the strategy. First of all, you want to choose a stock that you believe in and has strong fundamentals and growth potential ahead. Second, you want to determine a strike price and expiration date for this put option. I recommend choosing a delta of 15 to 20, and that's really where I'm comfortable at. A lower delta means less premium, but also lower chances of getting assigned. You want to sell the stock at good support levels like 200-day moving average, bottom of the Bollinger, as some examples, as there are high chances the stock will actually bounce from those support levels and you will get to pocket the premium. Also, selling puts on a red day will result in higher premiums than on a green day. So once you've checked off on all of the above, it is now time to go ahead and sell your put options and pocket that premium. After selling the put options, just monitor your position, and if your put option is in profit before expiration and you're comfortable taking a partial profit, then you can go ahead and close that position and buy back that sold put. We touched on the risk earlier, but let's do a quick summary again. If the stock price falls significantly, you might end up buying the stock at a higher price than the current value. If that happens, just hold on to your stock until it's profitable and then you can sell it for a profit. Again, you have to make sure you have enough cash to cover the stock purchase if the option is exercised, and steer clear of doing the strategy on meme stocks or stocks with weak fundamentals to avoid bag holding those stocks for a long period of time. Next, let's get to why you're here. Let's see how we can make $10,000 selling put options. And for my first example, I'm going to do it on NVIDIA. So I have NVIDIA pulled up on Robinhood. And what we're going to do is click on trade NVIDIA options. We're going to go ahead and sell. So today is Friday, May 2nd. We're going to go ahead and go out a week to May 9th. So today is an extremely green day, meaning that the premiums that we're actually going to collect are not going to be as high as if we did the same exact strategy on a red day. So let's go ahead and see how much we can collect by selling NVIDIA puts expiring next Friday. So this option right now has an 80% chance of profit. So if we go ahead with this options contract, it would mean that by next Friday, if NVIDIA drops to 109 or below, then you are obligated to buy NVIDIA at 109, no matter what the price the stock is at the time. So let's look at this 110 options contract right here. This is a delta of 25, but as you can see, the premium is much higher in comparison to the 109 strike price. If I go ahead with this option right here, let's see how much we can collect. So if we go ahead and sell 22 contracts of NVIDIA expiring next Friday at a strike price of 110, we could collect 2640 per week. You do this times 4 weeks and you're easily over the $10,000 threshold that we're talking about. So again, coming down to the risk, as long as NVIDIA stays over $110 at expiration, you get to keep that entire premium above. You will be required to buy NVIDIA shares at a strike price of 110. Now, if you want to go with the slightly less risky option, then you can go ahead with the 109 strike price. And in this case, we're collecting 98 cents or $98 per options contract. We would have to sell 25 options weekly to collect $24.50 or close to the $2,500 target we have to make $10,000 a month selling put options. Now, let's try the same strategy on another stock like Palantir. So I have the Palantir options chain pulled up here in Robinhood. I've gone ahead and selected May 9th, which is expiration for next week. So if you look at this 107 options contract right here, this is about a 20 delta. And right now it's giving you a premium of $281 per options contract. So if we go ahead and sell 9 contracts with a 107 strike price, it would give us the $2,500 weekly income that we're looking for or the $10,000 monthly income. And for that, you would have to put up almost $94,000 in collateral. Now, I would like to mention in full transparency that next week is Palantir's earnings. So the premiums are actually fantastic right now. They're going to be higher than what they are normally. In fact, if you do want to take advantage of the elevated premiums while the earnings are close, I would go ahead and sell these put options maybe 2 or 3 months out. And that way you can capture the juicy premiums that you're getting right now. And if the stock does end up falling after earnings, then it gives the stock enough time to recover and come back to your strike price if assigned. So I hope you learned something useful and enjoyed this video. And if you did, please give it a thumbs up, share it with your friends, and leave your comments below with any questions or thoughts. And let me know what topic I should talk about next. Thanks for watching, and I'll see you in the next one.